much. We'll talk about stable coins broadly because there's a lot of different ones, and I think it's good to cover them each in their own respects. But yeah, HBD is definitely going to be kind of a bigger focus for us. There was recently kind of a discussion on X, and I saw a bunch of well-known hivers, including Theycallmedan and some others, talking about HBD and at Lop, which is what's his name, Jameson Lop, I think, was talking about how he's never heard of HBD, and it doesn't seem like it gets any adoption, and it was
Yeah,
kind of a interesting battle. Did you catch any of that, Addicted?
I caught it late. I really like Lop. I think he's awesome. But he's borderline maximalist. He's not that bad, but like he's very much a Bitcoiner. So, something like Hive just goes right over his head. It's we're just too small. Like, when the hostile takeover was happening and Binance attacked us, CZ was like, "We don't care. Look at you. You're tiny. Like no one cares." You know what I mean?
Right. Yeah. I mean, it's like the small, fish in the sea. Like nobody really gave a shit when all that happened. I mean, we got like the decrypt articles and stuff like that, and I think we got what was it? Dan Larimer came out and supported the Hive fork a little bit, but outside of that, there wasn't a whole lot of attention on what happened, and it could have been a massive, like, if you imagine that happening, and I know we said we'd talk about HBD later, but if you imagine the hostile takeover situation happening to a big blockchain like Ethereum, Polygon, even Solana, some of those bigger ticket names. I mean, the whole situation for Binance would have been completely different. I mean, it would have been like exchange shattering for them. Like it would have destroyed their image um, because of what they did. But obviously because of the size of Hive, it just didn't really matter. Um, but yeah, I mean, we'll get around to HBD and talking about what we think is good about it. But to kind of kick this off, let's talk about global finance in general and the kind of market that stable coins are chasing after. There's a really interesting thing happening in the crypto space, and Eric kind of alluded to it, that stable coins weren't really around. Like if you've been around in this industry for long enough, stable coins are a pretty recent thing. In the last cycle is kind of when they exploded, and then obviously they're here now. But prior to that, stablecoins weren't really a thing. There were a few, and obviously like HBD, on the legacy chain used to be around, and it's been around for a while. But stablecoins never really got like huge adoption until the last cycle. So it's kind of interesting to see how they've been taking more and more market share in the space, especially in a space where there's so much speculation and people are trying to make like your average person in crypto is so much different than your average investor in TradFi, where in TradFi they're trying to make 10% a year, or just beat inflation, or follow the indices. In crypto it's totally different. You're talking to people who are saying they want to 10x their money, they want to 100x their money. So it's like a totally different environment. But that being said, there's still a lot of people who invest in these stable coins, earn yield on these stable coins, trade them regularly. So let's start with Task. How do you feel about the current state of global finance in general in terms of money? Because obviously stable coins are a representation of that. And then how do you feel about the rise of stable coins and kind of the trajectory that they're on?
So this is a week-long spaces, is what you're saying for me to answer this question. Um, well, to take the second part first, because I can go so many directions with the first part. Stable coins, it's no surprise seeing their popularity for two reasons. First off, if you're looking as a payment system, they are a medium of exchange. Bitcoin and other value capture tokens, as I call them, they can be medium of exchanges, but they're pretty shitty medium of exchanges because of the volatility, because of the hodl mentality, because the price go up mentality, that you need something that has that price stability, and stable coins to a degree do that. So that's the first thing. The second thing is, you mentioned yield, which when you look at the bond market, which far exceeds the market cap or the total numbers of stock markets, most people are yield investors as opposed to speculators. So I'm not surprised to see the popularity of stable coins tied to yield, because that's an important investment approach for many, many people. In fact, I would say probably for the majority of the people out there. Now, in terms of the global financial and monetary system, gets into the different layers that we have. We have the central bank money, we have commercial bank money, then you have wholesale banking and Eurodollar money. And so all three of them are different. And when you're dealing with the stable coins, you're looking at the commercial bank money level. They're trying to replicate the US dollar or whatever they're pegged to, and they're trying to mimic that price stability and offer those services, offer that similar type of consistency and results that you can get from the commercial bank money. The growth of stable coins, I believe, if we have to take this from a general perspective globally, I think everybody looks at payments, which obviously payments are huge, payments are important. Being able to, what can I buy with these stable coins is an important question. But I think the real hook, the real big numbers come when you start to incorporate these assets, i.e. stable coins, into financial services. It's one thing to be able to buy your coffee with a stable coin. It's one thing to buy anything with a stable coin. When you start to take and tie them into financial services, such as lending, where I take an asset, I put it up as collateral, and I get a loan paid out in stable coins, then you're starting to talk about a totally different world. And now you're starting to get into the idea of collateralized lending and the different forms of money that, the banking system, the international banking system, or more accurately, the banking cartel has utilized for so many years.
Yeah, so it sounds like you think, a big percentage of the adoption of stablecoins is by kind of some of these bigger players that might be chasing after yield. Eric, what's your opinion of, the status of stablecoins and the trajectory that they're on?
Yeah, so basically, a few years ago, whenever you were up or you were getting profits when you were in crypto, you basically had to choose between the lesser evil, because, or you just had to go out of crypto because there was no way to go, you could say, kind of to safety, so to speak. So for example, let's just say that right now Bitcoin goes to $100,000, and you say, okay, I'm good with this. If we didn't have stable coins, if you wanted to preserve that wealth, you would have to move that money somewhere else out of crypto. So what stable coins basically, in my opinion, came to provide was, okay, now you have this safety pod where you don't really need to get out of crypto to minimize your risk by pretty much 100%. Well, just pairing it with the normal risk that you would have uh, with normal inflation with fiat currency. So that's for me, that's what's going to change the narrative for this cycle, but also for the future, because we are not going to see a lot of uh, outflows out of crypto now that we have all of these. You could call them trustworthy stable coins, but I mean that's probably a conversation for the next minutes. But there are many stable coins that are just a time bomb waiting to explode. Uh, but there are some that are pretty trustworthy. So you just have to know which ones are a good escape once you hit your goals or your profit deadlines, and you don't really need to get out of crypto to be safe from the volatility that you Carl mentioned a couple of minutes ago. That crypto is very volatile, yes, but now you can stay in crypto and not be exposed to this volatility?
Yeah, I know from my perspective, the first two cycles I was in, when you wanted to get into crypto, you obviously had to use, like a fiat bank account to transfer money in, be able to buy the crypto. And then when you wanted to get out, take some profits, you had to basically, KYC to something like a Coinbase, sell your crypto, and then, cash it to your bank account. Like you were saying, Eric, it has radically changed the industry in a lot of different ways. And in terms of, kind of the big cycles, because that's what everyone's talking about right now, as we kind of shape up for this bull market, the ability to cash out and utilize stable coins as a hedge against the volatility of the rest of the crypto industry is huge, in terms of, from a personal perspective, and then also from a, macro crypto perspective, in terms of not getting money out of the system. I think it has a really dramatic effect on not only price action, but just in general, the sentiment around crypto. It's not so much something where you gamble by putting money on the table, and then you got to take the money out of the table and leave the casino. Instead you're able to kind of, make your gambles, make your bets, play on the speculation in the crypto space, and then you can kind of hold, almost like holding the chips. And you know that the chips are going to hold their value as stable coins. And we'll kind of get into the individual stable coins and talk about our opinions of them later. But Edicted, what do you think about stable coins right now, the current adoption of them and the trajectory that they're on?
Well, I think that a really understated ability of stablecoins is the borderless nature of them. Like, it's really easy to turn USD into stablecoins, but it's not really easy to just send USD to like China. But you can send stablecoins to China, no problem, because it's borderless. Like, so it's kind of crazy that like there's a lot of countries out there that are like, oh yeah, give me some of them stablecoins. Like, that money can go anywhere and I don't have to ask permission. You know what I mean?
Yeah, 100%. The remittances and the ability to move money across borders is a huge part of stable coins. And that was a huge thing for, the early crypto narrative, was that, it's easily transportable as Bitcoin, and you can move it around seamlessly. So it is kind of interesting to see that take shape in the form of stable coins. I think if you were able to predict that stablecoins were going to become a thing and become so popular, it would have been easy to predict that. But I never really heard people talking about that in the early days of crypto. It's definitely become more of a recent thing, and being able to cash out is one thing, but being able to move your money around the world and not worry about the value of it is totally different. And like Tass was saying, stablecoins offer that form of exchange that people have been looking for, not just in crypto, but just in general for a really long time. So now let's kind of flip over to more of an open discussion format. So you guys can raise your hand. The speakers on here can raise your hands whenever you feel like you want to jump in and chime in. But I want to talk about the individual stable coins that are out there. There's so many different stable coins. You've got, HBD, obviously, which is a decentralized stablecoin on HIVE. You've got DAI, which I'm pretty big into as well, which is on Ethereum through the MakerDAO protocol. And then you've also got centralized stablecoins. So I think it's easy to kind of form two buckets for these things and talk about centralized stablecoins and decentralized stablecoins. So if anyone wants to jump in, I think it's interesting to look at the lens of, what are the risks of a decentralized stablecoin versus a centralized stablecoin. I saw someone in the Threadcast already mention UST and, our thoughts on that. Obviously, when you have a decentralized stablecoin, there's certain risks, but there's also risks with centralized ones. And we've seen a lot of different, depegging events and issues with, even with Tether. I mean, there's been this huge controversy around it for years about if it's actually fully backed or not. So what do you guys think about, decentralized versus centralized stablecoins? Do you have a preference on either one? Do you believe in, supporting both? Anyone want to take that?
Yeah, I'll take it. To me, it all boils down to counterparty risk, whether you're talking decentralized or centralized. Obviously, with the centralized, the counterparty risk is more overt. But like you said, with Tether as an example, but it's the same with USDC. How do you know that coin is backed by what they say? And because the company says so or the foundation says so, well, that's kind of tough to buy. Then, even if it's audited, you're at the expense of the auditors, which, if anybody remembers the Enron situation, auditors are not always the most trustworthy and honest fish out there either. So, when you start to look at the centralized stable coins, this is just basically a new spin on the same existing financial system. You have to trust the financial entity or the entity behind the stablecoin, whether it's Circle, whether it's a Tether Foundation, whether it's JP Morgan, whether it's Goldman Sachs, whoever ends up with these things, PayPal with their stablecoin. You have to trust the entity. And to me, that's just like half a step removed from what we have now. It's really no different. They control their ledger. Circle has the ability to negate transactions and to negate holdings and go after wallets and all that stuff, which to me, it's like, okay, now you're back in the same exact system. And guess what? The governments want to regulate it. As for the decentralized, UST was a lesson in how decentralized doesn't mean anarchist and without parameters and basically stupid. I mean, when you have a stable coin that has a higher market cap than the conversion asset that it can be turned into, you have a problem. Because now you have, and I forget the exact numbers, but it was like UST hit like 25 billion and there was only like 20 billion Luna out there. Well, obviously that doesn't work. So I think part of what the industry has to do is realize what parameters need to be put in place. You need people establishing these things, even in the decentralized realm, with the mindset of security, safety. Where are the attack vectors? What do we need to put in place for resiliency? And then, of course, it always goes back to, if these stable coins are base layer, how decentralized is your base layer? Because you started the show with the Justin Sun attack. When you have somebody exercising a pre-mine like happened there, now all of a sudden you may have a bunch of different witness nodes, but they're under the control of one entity. And when you have a bunch of block validators under the control of one entity, that entity controls the chain. That is no longer decentralization, that's centralization. And so we always have to keep digging down and say, okay, this stable coin, what is it tied to? Who's behind it? Where are the attack vectors? Where's the point of vulnerability? And where do we lose the decentralization? And I think if you look across the board with most stable coins out there, they fall into that category where there's something behind it that removes the decentralization.
Yeah, the thing about stablecoins and the adoption of them, I think the most important, aspect of them or benefit of them is, and it's in the name, is stable, stability. And the other word that would, obviously be like a synonym in there would be trustworthiness. So when you look at the adoption of any stablecoin, you really need to have a lot of layers of trust in terms of, how it's built and what is going to happen to it in the future. And if any level of that trust is broken, it leads to a very dangerous fallout. So, you mentioned UST and the Luna situation. Back in those days, I was actually a huge holder of UST. Had a bunch of UST on Anchor, earning the 20% yield. And as I saw it grow and obviously it expanded very quickly, I did start to get nervous about the market cap of Luna. And I did hear, kind of backroom chatter about people thinking that UST wouldn't be able to hold its peg if we saw any sort of dip in Luna. And Luna just had such a meteoric rise, and UST had a huge rise in the usage of it that a lot of people did get nervous, and I was one of those people. I took my money out of UST, weeks before it crashed, when people kind of started chattering about potential issues with it. So I, I've seen firsthand what happens when you have even one little layer of, distrust kind of build up, and then it cracks the entire foundation, and the whole stablecoin collapses. And a more recent example, and obviously not as serious of one in terms of blow up risk, is USDC. So USDC had a large percentage of their, or I guess not that large, but a significant percentage, let's say, of their reserves in Silicon Valley Bank, SVB. And when we had that whole bank run crisis, we saw a little bit of trust get degraded from USDC. And I was reading an article from Bloomberg yesterday. USDC's market share of the stablecoin market in crypto has really degraded ever since that moment. So I think within weeks of that SVB collapse, so USDC lost about 10 billion of its stablecoin share, and since then it just keeps dropping. So I think they're at 19% now in terms of stablecoin share on the market, and that's a lot lower than it used to be. USDT has gained a lot of that dominance from USDC. So, clearly people trust USDT more. It's been around longer. Supposedly, they've doxed their reserves, but, I think there's still a lot of questions there. But I do think you brought up a key point about trust and the layers of trust behind stable coins, and that being kind of like a key adoption point. So if we kind of layer that into, let's just say, from a more personal perspective, what are one or two stable coins that you actively trade in and out of, or even hold for yield? I'll start with you, Eric. Do you have, one or two stable coins that you prefer to use, hold? And if you do, why do you trust them? Why do you use them? Why do you feel that they're, perhaps superior to other ones?
Yeah, so pretty much first, I am very, very reluctant to using USDC and USDT. I'm not saying they are bad. I'm not saying they are not trustworthy. I just don't communicate. I don't know the word. I don't coincide with the foundations of how centralized they are, and how much they resemble a corporation, and how much they respond to governments, and how much they will bend the knee when a three-letter agency asks them to. And I was actually reading something yesterday. The main problem with Ethereum is that USDC and USDT emitters are pretty much controlling where the hard forks are where the ETH hard forks are going to go. So, and this is true. And the problem is these are not independent or fully decentralized entities, and that really leaves me with. I mean, there are a lot of other stablecoins, but I do like how DAI operates and how backed it is by MakerDAO, and the economics behind it. I actually have a lot of, well, not a lot, but I have some DAI, and I have some RAP BTC and Ethereum on MakerDAO as collateral to DAI. So I trust how it works. It will never be a 100% trust. You just have to choose which one is the one that aligns more with your values and with your risk assessment. And the other one, of course, is HBD. I was actually thinking that after this bull market, I would love to have $200,000 staked on HBD, generating for me $40,000 a year. And the only thing that I was wondering was, is this yield going to be sustainable? And at one point, will we ever face something like the UST debacle? And of course, we have a lot of instruments and tools to avoid this, but you always have that looming threat in your mind telling you, hey, there's always risk. Never go full blind into something. Always consider there could be things that you didn't take into account. But if I would have to choose, the ones that are the least risky for me would be HBD, of course, and DAI.
Yeah, so it seems like you kind of prefer the decentralized stablecoins, obviously with HBD and DAI. I definitely echo on those, and I think that's a good transition also to HBD in general. And I'm going to toss this over to Edicted to talk about. But how do you guys feel about HBD in terms of holding its peg, number one, and number two, the yield, the 20% yield, which I think is kind of the hot topic um, around the Hive blockchain, which is should HBD be paying this 20% yield? What is the value of paying this yield? How sustainable is it? As someone who holds a lot of HBD, I do trust it because I've been on the legacy chain and now on Hive for I don't even know how long now, 7 or 8 years. So I've built up trust in this ecosystem in a lot of different forms. But from an outsider's perspective, looking into HBD and seeing it does kind of seem like something that could have a lot of volatility, something that has lost its peg to the upside and downside before. So like I said, from an outsider's perspective, it might look kind of crazy to want to hold a significant amount of HBD, but from an insider perspective, knowing the chain, knowing the community behind it, and understanding the levers that are behind the scenes that weren't there for UST in terms of having a haircut and other rules, I think is a really interesting perspective. So, Edicted, you want to tell us why you like HBD, or maybe you don't like HBD, and how you feel about the 20% yield?
Yeah, first thing I wanted to say is just echo what Taskmaster said, that Tether isn't really backed by reserves, it's backed by their reputation. That's what all these centralized coins are backed by. Like, and that's what, currency itself is backed by, is like, reputation and collectively agreeing that the asset is worth what we think it's worth. And I just think it's really funny, all the smack talk that people throw at Tether, because I don't know if you remember, like way back in the day, USDC and True USD, TUSD, people came up with all these reasons for why these new stablecoins coming out were like superior to Tether in every way. But the Tether Corporation has proven that their reputation is better than like the ones that came after. And now all these, like Eric said, now all these basically like USDC and Tether are like embedded into EVM chains, and you can't get rid of them. And they like decide where the hard forks go, because the nodes that they're running, if they just decide that they're not going to run the new code, then like what are they going to do? Like what are the devs going to do? Are they going to like fork the code without the stable coins that everyone's using? Like it doesn't really make sense. But in terms of HBD, I really think that we do need to lower the APR on it. Like once the debt ratio starts going out of control, just like just like with Luna. Like if the debt ratio gets bad and Hive is a good price, then you got to lower it to like put a cap on like the amount of inflation we're creating, basically. I don't know if you wanted to, like, did you have another question about that?
Yeah, no, I mean, just so you think that APR should be lowered, and other mechanisms in place. I mean, Dallas has put out some pretty good research about this in general, in terms of how big HBD is, in
Yeah.
terms of what he thinks about the long term. So yeah, I mean, just a follow up would be, how do you feel about HBD getting adopted? Like maybe give like one or two reasons why you think HBD could get adopted, or what you think needs to be in place for some adoption to happen.
Well, the regulatory climate right now is abysmal. So I don't really see that happening, you know? Like we can't get listed on exchanges. Like Lop was talking trash saying we only have 10K 24-hour volume, and it's like, yeah, because how else we can't get volume. Like it's not possible. And I actually think that HBD is doing amazing because it used to be terrible like a couple years ago. I don't know if you guys remember, but everyone's like, we should just get rid of it. Like we should just fork Hive and get rid of HBD. Like a lot of people were saying that. And now it's like no one's saying that anymore because HBD is actually good. We have the Hive to HBD conversions, which make it so it doesn't go over, $1.25. Usually it won't even go 5 cents higher than the peg. We got the what is it? The proposal, the stabilizer proposal that like has added a ton of liquidity. Like even though you can't trade that much on the internal market, you can trade enough for like 95% of the users. Like only whales are like kind of can't really use the internal market to like slosh around a bunch of money. But if you want to take a loss and you're like buying HBD, you could take, your 5% loss and it wouldn't be that big of a deal. You could buy like millions of HBD with conversions and it would only cost you a 5% cut. And with a 20% yield, it only takes 1 quarter. It only takes 3 months to get your 5% back. So I don't know. I think that it's really underutilized, but it's hard to see a path where we could get like mainstream adoption through the regular legacy channels. Like the regulators aren't going to let us get listings on. So basically we need decentralized exchanges. And I heard that we might be working on that, but I'm not sure.
Yeah, between that Lop and Dan conversation, it was pretty interesting because the 10K 24-hour volume obviously doesn't include the internal market. The internal market trades actually a pretty decent volume on a regular basis. And speaking from a personal perspective, I think it was about 6 months ago or so. I bought a few 100,000 worth of HBD, and I was able to do it entirely in the internal market. And I ran the math at the end, and it was basically a net neutral. I think I probably paid maybe like, a point in premium, probably even less, in terms of to get that HBD. And it took me about a week to convert it all. So yeah, I mean, for whales, if they want to move millions of dollars into HBD, it's obviously not feasible right now to just like click a button and have it all like you could with USDT or DAI or something like that. But a big function of that is the market cap of HBD and how much is actually circulating out there. It's just slightly above 10 million last time I checked it. So there really isn't a lot of HBD out there at the current state of the market. But yeah, I think exchange listings is really important. I think decentralized exchanges are actually starting to take good market share from centralized exchanges. So having HBD on decentralized exchanges is going to be really important going forward, especially because, like Edicted said, it's hard to get listed on centralized exchanges when you're decentralized. It's, and Krim says this pretty frequently too, because she's obviously the one working on it. But, all these centralized exchanges are ironically looking for, centralized founders, centralized, teams that they can kind of point to and rely on for these exchange listings. So the very fact that Hive is so decentralized is actually one of the barriers to getting onto these, exchanges and getting listed, both for Hive and for HBD. Obviously, Hive has better listings, especially with the Binance listing than HBD does. But it is a huge problem and a huge burden to overcome. And, I obviously am pretty vocal about trying to get HBD and Hive onto more DEXs. Eric, you got your hand up. Do you want to chime in about HBD?
Yes. And this is something this is a conclusion that I got into after speaking with Edicted, with Taskmaster, with several people on chain. And so this is not mine. This is just benchmarking from everyone who's got a bigger brain than mine. The thing you want with HBD right now is to keep it high, because the bear market demands you to have something to attract capital or to let the capital stay here. You have to plan ahead. You cannot plan like if we decided, hey, let's drop that 20% APR of HBD. Yes, let's do it the moment Hive gets to, I don't know, 5x from the current price, and then we will prepare for that. And then you lower that APR once there's money in the streets, once you don't really need to have a high APR to keep the capital in the blockchain, because the capital will stay there because the bull run is already here. So you have the main thesis of, okay, there's a bear market, we cannot pay 20% APR. I don't agree with it, because it's exactly when we need to be paying a high APR so that people don't go to USDC, to USDT, to DAI, to all the other options and tools that are out there. We need to keep the capital here. Once Bitcoin goes to $100,000 and everyone's happy and blah blah blah, we could lower it to 10,000 to 10%, 12%, and it won't matter, because the people will stay on Hive or do whatever they want. The APR will not be a factor during the green days. So that's just my take.
Yeah.
Yeah. Oh, go ahead, Edicted.
Um, yeah, because I said, oh, we should maybe think about lowering the APR, but the basically in the situation you want to do that, it's like, yeah, Hive needs to go like 10x, and then the debt ratio has to be bad. So if Hive goes like 10x, if Hive's like a couple dollars or something, and the debt ratio is bad, we need to think about lowering it. But if the debt ratio is like 5%, we don't need to do anything. Like if the debt ratio stays 5% or less, like then that means the demand for Hive and HBD is rising kind of at the same rate. And that's exactly what we didn't see with Terra Luna and the UST ecosystem. It was like they were tricking these, VC investors into, hey, come get this 20% for free. There's zero risk. And it was totally messing up the ratio for the debt ratio. And it was like, oh, well, you know, I don't even necessarily believe that 100% debt ratio is bad. Like, but there has to be a haircut somewhere. Like if Terra Luna had a haircut, even at like 200%, it wouldn't have crashed to zero. Like the debt ratio spiraled to like 1,000%, 10,000%, like it was over because there was zero haircut in place at any level. But there are several things that we do, like including the 3.5 days of like, price averaging that like stop the death spiral from happening.
Yeah, I think, looking at HBD, especially in the lens of, having that, Terra UST situation that we can kind of dissect and learn from is really important. Um, I'm a big fan of keeping the APR at 20%. I think that we've got, in terms of and like I said, there's not that much HBD out there. And relative to the Hive market cap, I think it's like 8% or something. That's HBD. So it's like, we already have a liquidity problem. There isn't a lot of HBD out there. And if our goal is to get more people using HBD and create more liquid marketplaces, why would we lower the amount of HBD that's coming into the system that's being created? To me, that's counterproductive. I think you kind of have to decide, do you want HBD to be propagated? Do you want there to be more HBD out there? Which, yes, is more debt, but it also is more adoption. It's more, potential, conversions with Hive. It's just generally better for the marketplace. And when you look at, Lop's sentiment, obviously he's, taking kind of a hard charge stance at it, but, he's not entirely wrong that HBD isn't listed on a lot of exchanges. It doesn't, from the outside, because obviously an outsider doesn't really understand the internal market dynamic. From the outsider perspective, it doesn't have adoption. It doesn't have good trading volume. You can't ignore these things, and they are important problems to solve. So I think lowering the interest rate, in my opinion, doesn't really make a ton of sense. And one thing that Edicted saying is, as the market cap of Hive goes up, there's a lot of different things that we can do. There's a lot of changes that can be made. especially with how nimble Hive is as a governance chain. There's a lot that can be done to make the system healthy and keep it healthy. So I'm definitely in favor of keeping the interest rate and allowing more HBD to enter the system, so that in the long run, we can lower that interest rate, but also still have a bunch more HBD in the system that can be easily used, easily traded on decentralized and centralized exchanges. I think a big barrier to getting listed is just generally liquidity and circulating supply. As a medium of exchange, you need to have a lot of supply out there. You need to make it really easy to transact. So they call me Dan. Just joined the speaker panel. Just to kind of catch you up, we've been talking about global finance in general, and then stable coins, and we talked about centralized versus decentralized stable coins, and kind of the rise of market share that they've taken and the use case they've built. And then obviously now we're talking about HBD and what we believe the long-term impacts of HBD could be if we try to build it. So welcome to the panel, Dan. Do you have anything you want to chime in about? I know you were kind of at the core of the LOP debate in terms of HBD.
Yo, yeah, I can chime in. You might hear some cats and babies and shit. I'm at my house, at my office, but yeah, I thought it was interesting. The first metric, if we're talking, I guess, LOP, loop. The first thing he pointed to was like centralized exchange volume. So like if you want to just really break this down and think of how a decentralized stablecoin would act in practice, you would think it would be more used in circular economies, more peer-to-peer. So I would think the first metric would be to go look at the on-chain transactions and see how much HBD is exchanging hands. Because I think a lot of people have confused the idea of a stable coin as, well, it's used to be risk off when you're not trading speculative assets, right? Like, I don't know if they even thought of the idea of like circular economies, because most stable coins, all stable coins outside of HBD, I hate saying that, but maybe someone gets triggered and wants to debate me and we learn something. Outside of HBD are centralized. So the idea of having a circular economy with a centralized stablecoin is kind of stupid, because it defeats the purpose. It's not a circular economy. It's a rented economy that can be controlled. And, you might as well use any of the other centralized apps for that can do dollars. So if it's a true decentralized algo coin or stable coin, or I call it a mirror world asset, you're not going to have a lot of trading on centralized exchanges unless people want to use it as a speculative asset, to flip speculative assets. But for that, you want volume, you want centralized funding. So centralized stablecoins are perfect for that. If we're talking a decentralized stablecoin to create circular economies, those aren't that great at that. At least not at first, not until they get enough network effect and enough volume. So I would say look at the on-chain metrics, look at how many people are saying they're actually using it. If there's more influencers and VCs shilling the stablecoin than merchants and employees being paid and using it, then you have your answer. There's far more merchants and people being paid and using HBD for its intended purpose, what it says on the tin, circular economies, peer-to-peer money, than, people are with Tether. Yeah, you might have some people say, oh yeah, I use Tether and all that, but they're doing it through a centralized app. It disqualifies. It doesn't count. That's not what we're doing here. That's a cheat code. I don't really care what you're doing with your behemoth of a Web 2.5 monster. I want to know what you're doing from a decentralized point of view. So if we're talking about decentralized stablecoins, Hive HBD is doing so much. It has so much merchant. The fact that it has one merchant somewhere in the world accepting it, and it has one person being willing to work and be paid for it. That Loop and all these freedom fighters should be shouting from the rooftop and say, "Hey, look, there's a little green sprout growing. Like, it's a real grass. It's not this fucking, this whatever,
This space was downloaded via spacesdown.com. Visit to download your spaces today.
or this fake stuff that we're just forcing into the ground all around and trying to pretend everything's okay. There's actually something organic here. So it's just, it is, it pisses me off. It's just like, that's the state of crypto. That's what it is. That's what the, like, instead of giving something a chance, you're going to judge it by it's so funny as well. It's like, oh, let's judge how decentralized and how good this thing is based off its centralized exchange volume. It's like, I don't know, people are stuck in this world of flipping assets because nothing has a use case except Hive and HBD. And I'm sure there's others as well, but I'm talking about like people actually using it, earning it, not having to buy it as an investment, but value for value model, people climbing ladders out of purgatory into prosperity, changing lives, no VC funding. All of this is never mentioned. So, I think Loop was just out of line. And then when he was educated on it, he just closed the topic. He was like, I'm done talking about this. So it's very strange behavior, in my opinion. But yeah, that's the Loop.
Yeah. Yeah, I do think it's ironic, and we kind of see this in general in crypto, not even just around stablecoins, but kind of like this proxy decentralization movement. There's so many people out there that, talk about decentralization and how they're proponents of it, but, at the same time, they're, ironically, very involved in centralized things and don't really, they're almost, purposefully ignorant to, the centralized pitfalls of what they're into. And in general, I do think that, it takes building something that's decentralized takes a lot more work. It's a lot harder to do. It takes a lot longer. You have people that debate it. I think and I've been vocal about this too, I think one of the huge indicators and benefits of Hive, and an indicator of its decentralization is actually how much debate happens and how much disagreement happens on Hive. I think if you have a system where people don't really disagree with each other, I think that's an indicator that you're pretty centralized, you're pretty, controlled in a certain way, where, if everyone's following the same narrative and you guys are all agreeing, something's probably not fully decentralized, in terms of that. And, Hive does a great job of having these open format debates. And by being a blockchain that's centered around, kind of like a social media, aspect, we are able to talk to each other. We're able to connect with each other and discuss things and talk about why we believe in something and why, someone else believes in something, and then kind of create a path to move forward. Task, I see your hand up. You want to chime in about HBD and your thoughts?
Yeah, there's a lot to dissect here. To start with, my research boils down to something very simple when it comes to currency and a value. What gives a currency value is the economic productivity tied to it. We can talk about reserves. We can talk about all this bullcrap. The bottom line is any of these stable coins will only have value based upon the economic productivity that's tied to it. And Eric's right about some of these stable coins being parking spots. But as Dan just mentioned, that's only a sliver of the totality of use cases for a currency, especially a stable currency. The next leg up is when you start talking commerce, which he summed up as a circular economy. And understanding that HBD is so small right now, HBD doesn't have a lot of economic productivity tied to it, a lot of economic activity tied to it. So we have, and Dan, I loved your video the other day, or your space the other day, because I think it's an analogy we can work with. It's actually backed by digital real estate. So that adds the scarcity element to it. But the problem I have with a lot of the conversation that took place so far is you all sound like central bankers. Quantitative easing, we're going to quantify it. The basic, what's the proper, haircut level? Well, if it gets too high and we have a market cap that's 5x, then we got to reduce the interest rate because there's too much HBD out there. And it's like you're trying to operate in a vacuum. It's like what's taking place at that time based upon the currency? What type of economic activity is out there? Because first off, if you have most of your HBD locked up in time vaults, well, then that's obviously not a threat to the chain, at least on an immediate basis and an immediate attack vector. So what kind of activities out there? And when we look at the APR, why it always just frustrates me when people say, oh, the APR is so high. What the hell are you talking about? What are you basing that on? Well, because, you only get 3%, from the Fed. Who cares? What's the growth rate of the HIVE economy? What's the growth rate of HBD adoption? What's the growth rate of users over the next 10 years? Could it be 50, 60% a year? Yeah, because we're only at, what'd you say, 10 million, Cal? What Dan just talked about right there, Dan's, that little thing that he said about circular economies, now you're talking somewhere 50, 100, maybe 200 billion HBD if you want to be successful. Now, I spent 2 years writing about HIVE bonds. Payments are minor leagues. You want to get into the big leagues. When I start talking about HIVE bonds, you start talking about trillions of dollars. Now, I'm not saying that HBD and HIVE bonds and all this stuff's going to take over the world. But when you're trying to develop high quality collateral, which HIVE bonds could be based upon HBD for all the reasons that you guys mentioned, the benefits of HBD, that all factors in to these HIVE bonds and the ability to collateralize them. And once you're to that point, you're in an arena where there's probably $10 to $15 trillion deficit in terms of what's needed to sustain global trade. So these are things that people need to keep in mind. And when you try to look at anything monetary or anything economic or any of this stuff in these, and Bitcoin maxis do this all the time, they look at this stuff in a vacuum and it's like, what you're talking about isn't even historically correct. And just because you point to one situation, that maybe happened 40 years ago, 50 years ago, 60 years ago, what about the 10 situations that happened over the past 400 years where that's not correct? And so Cal is absolutely correct. When you're looking at this currency, HBD, the idea of less HBD is better makes absolutely no sense. Because I'll tell you honestly, if you could create 25 million HBD and give them to Dan today to help Speak Network, I guarantee you he could get things done a lot quicker and produce a hell of a lot more with the Speak Network because he could go hire a lot more developers. He could get more marketing people. He could get all this because suddenly he has money. And that's what it is. Now, obviously, if it doesn't go to anything productive, then you got problems. But when you have people building, when you have projects expanding, when you have platforms growing, that requires money. And this idea that you are going to destabilize HIVE, yes, we have to look at the attack vectors. Yes, we have to figure out resiliency. But one of the things that I loved about going multi-chain with Leo was the fact that you created these derivatives. There again is another form of resiliency because now you don't have all of your coins on HIVE or wherever. Now you have some on Hive Engine. Now you have some on Polygon. Now you have some on BSC. And so as you start to create derivatives and as you add to the sophistication of the currency, then you also have to look at the liquidity. You have to look at the depth. You have to look at the distribution. And these are all important factors that you don't hear people talking about, but they're highly important. And this is one of the reasons in my research of the US dollar, everybody says the US dollar, oh, that's going away. It's going to be replaced. Oh, okay. What kind of derivatives are the BRICS going to come up with? How long is it going to take them to get 12 trillion in Forex derivatives out there that the US dollar has? So people can hedge the Forex risk. It'll take them forever. What kind of depth, liquidity, and as you guys pointed out, we have a major problem with liquidity with HBD. That's not going to be solved by creating less HBD, in my opinion.
Yeah, there's a few, key pieces for HBD that I've, been watching and thinking about in terms of how can we get more adoption. I am a firm believer we needed more adoption for HBD in terms of, its benefit for Hive as a currency, as a blockchain. I think the adoption of HBD is a bullish thing overall, for the Hive ecosystem. And like Task is saying, like, having more money floating around, as long as it's floating around to productive things and people that are good actors for the chain, that's a good thing for the ecosystem. It's not a bad thing to have more money floating around, even more debt floating around. Debt, everyone looks at debt as this horrible thing, but they kind of miss some key points that, it matters more how you use that debt. It doesn't matter so much how much debt is created, that there is debt. It's all about how it's used. And I posted a screenshot in the Threadcast. The current debt ratio for HBD is 5.88%. So Hive's market cap right now is $190 million, and there's 11 million HBD out there. Obviously excluding the DHF, since that's not really circulating. So, you've got this really low debt ratio for HBD, and the whole discussion around, making less of it, I think is totally irrelevant. And that's why I go back to that point I made earlier, which is we need to define what the goals are for HBD. Do we want more? Do we want HBD to get more adoption, or do we want it to get less adoption? Because I think there is a debate around that. And lowering the interest rate is an indicator that people want less adoption of it. They want less debt out there. So I think it'll be kind of interesting to see how that shapes up. I am also a big fan of Hive bonds. I know Dow's put out a post today about it too. Creating a lockup period for HBD. I think that's a good thing. It's almost like a loan to the ecosystem when you allow people to own these long-term bonds, or these long-dated bonds, essentially. Edicted, you got a couple of things to add to that?
Yeah, I just wanted to parrot what both you and Taskmaster said, and just reiterate that we cannot control the demand for debt. Like, if there's a high demand for debt, then the market controls that, right? So, like, if our debt ratio skyrockets to 30%, like, I might be saying we should lower the interest rate to bring it down and, like, create less demand. But if that demand is actually, like, organic and it's not going away, like, say we lowered it all the way to 0% and it's still at 30%, like, the debt ratio, like, we lower the interest rate to 0, but the debt ratio is still 30, like, then we're going to have to raise the haircut limit, because it doesn't matter. We don't have any control. Like, so it's really hard to talk about this issue because there are so many, like, random factors. And I think Edwin wanted to speak. Is that correct?
That is correct. Cal, is that okay? I don't mean to jump in out of turn.
Yeah, no, go ahead.
Okay. Been listening, some amazing high-level discussions. When I listen to some of the OGs and the big brains of Hive speak, I always learn quite a bit. Edicted kind of jogged my noggin a little bit there when he talked about organic demand. And that's one thing that we can all do. A lot of the content that's created on Hive and the various front ends of Hive is created for us. It's very Hive centric. It's tied to a particular community, but it doesn't mean much to people outside of those specific niches or communities. And so one of the things we can do, and one of the things I've been doing, is going out and finding things that are trending, that are topical, that people care about, and talk about those things and bring them to, in Leo, bring them to Peak D or whatever your favorite front end is to read about. And then in my live streams, I show how easy it is to post on Hive, to register for Hive, to use the different services, whether it's Leo, Peak D, again, whatever your favorite front end is. But keep connecting back to people, because the high-end discussions are great. But if you want to drive demand, we need to give people a reason to use these services and participate in that circular economy. Make them want to come onto Hive and write something and get some Hive, and then get some HBD or get some Splinterlands cards or whatever the application is. Entice them there. A lot of it is just discovery, though, because there's so much noise. And we can yell all day long at the mountain, but eventually we have to get up off our butts and go walk over there to the mountain, go to where the action is and talk to action. Along with that, I just look at chatterboxes and I go and talk to chatterboxes, and some of those people you can entice, right? Just yesterday, you had a United States candidate for president saying that she wanted to strip anonymity away from social media. That's a great point to engage with people on Hive. The whales we're making, the way, I don't know if we have any of our good friends like Sunsika, but the way like Hive in places like Hive back dollars in Venezuela and in Nigeria can be life-changing money that people can use to buy the fundamentals, the necessities of life. These are all things that people can immediately understand. So if we get into the idea that along with our big brains, we need to get people out and be not quite an apostle, but a little bit of an evangelist, but, not talking at a real high level, just going and talking to people where they're at about things they're interested in or they're passionate about, and then connecting that back to Hive. Then I think we can create a lot of demand. And then it's up to you developers and you big brains to create these applications and these services where we can engage this circular economy. But I'll stop now.
Sweet. Yeah, totally agree. Thanks, Edwin. Task, you got your hand up. Do you have a few quick thoughts before we move into the final Q&A section?
Yeah, I just think it's very important that we keep emphasizing the relationship between HBD and Hive. And you mentioned the internal exchange. And the more HBD that is pushed to the internal exchange to be swapped out into Hive, what's that going to do? It's going to push the price of Hive up. So you cannot separate the two. And everything we've been talking about here, guess what all of this requires? It requires resource credits. So if you have, I don't know, pick any number of HBD out there, and if it's being used for payments like Dan was saying, if it's being used for financial transactions, if it's being used, for loans, if it's being used for anything, guess what that equates to? That equates to transactions. That equates to activity. That equates to writing to the blockchain, which means somebody has to have that Hive state powered up to have the ability to resource credits to operate. So I do agree with that statement. I forget who said it. It may have been actually Starkers who said it, that HBD is a Trojan horse, because this is really a way that, if you think about it, anything that generates activity is going to push value to Hive, the coin itself.
Definitely. So we got about 10, 15 minutes left in the show. So I've asked the audience to start asking questions in the Threadcast. I'll just start to pick out questions, and then any one of you guys on the speaker panel can answer anything you want. So no need to even raise your hand. Just jump in.
I actually have a question for Taskmaster.
Go ahead.
I know he hates trying to tame the market cycle. He always talks about, like, you can't tame it. Like, do you think we just shouldn't even try and just keep HPD at 20% forever, as long as we can keep that up? Or do you think we should, try to mess with it at all?
You mean the business cycle? No, I don't think you have to mess with HBD. So don't forget, HBD has a expansion and contraction mechanism with the conversion. HBD is truly driven by the market. If the community wants less HBD, they can take the HBD and convert it to Hive. If they want more HBD, they can take Hive and convert it to HBD. So unlike, central banks trying to monkey around, which the central banks don't do money anymore anyway, but like trying to watch commercial banks and their credit and their lending and all this other stuff and trying to get them to increase their lending, it's very simple with HBD. If somebody wants to create more HBD, like was said earlier, go and convert a bunch of Hive to HBD, yeah, you're going to take a haircut for what, 5%, but at 20% APR, that's not a problem. Now, to go add one point to this, when you start looking at time vaults, certainly if you're looking at like something similar to a bond tree, I think we're going to have different levels. And I do agree, 20% for a 3-day commitment. Okay, maybe that should be fixed. Maybe 20% requires a 12-month commitment or something like that. But you could establish a bond tree where you have these different time vaults of, 30 days, 90 days, 6 months, a year, 5 years, 10 years, 20 years, whatever you want to do. And you can adjust the rates accordingly to what people lock it up for. And then, I think there's other mechanisms where if the blockchain gets in trouble, you can do other things from a security perspective. You can slow the conversion time down. You can add additional layers in the conversion mechanism, things of that nature. But I think it also is becoming aware of where the HBD is resident. Is it resident on other chains? What's it being used for? Is there 100 million HBD in Venezuela that's just being used to pay for goods and services in the real world? If that's the case, that HBD isn't a threat really, when you think about it, to the ecosystem, because that's just money out there circulating that people are utilizing. So I think, again, it comes back to trying not to look at all of this stuff as a quantitative, oh, if we do this or if we reach this level, then we have to instill this change. It's more looking at everything from a macro perspective as it applies to the currency. And where are things at? And what's influencing what? All the time, I don't say that we shouldn't have these discussions about security, about points of vulnerability, and try to eliminate them. We don't want a Terra Luna situation. And I think everybody on this call, or on the panel at least, would agree that we are light years ahead of UST and Luna with the safeguards that HIVE put in place where they had none of them. So better or worse, right, if it's right or not right, we do have the 30% haircut. We reach that, everything shuts down with HBD. So we do have some things in place. We do have, I've learned you just want to try to deter the people trying to game the system. If it's a pain in the ass because it's a 3.5-day conversion or a 3-day conversion, they don't like that. If they have to lose 5%, they don't like that. These are just stumbling blocks that it's like, okay, this is too much of a pain in the ass. I'm going to go try to, game something else.
Yeah. So what you're saying is because HBD can grow 20% a year, it doesn't matter that we're printing 20% a year.
No, at 10 million, no, I don't think that. And again, here's another thing to just throw another part of the equation. What if we get each of the next 10 years, HIVE, the ecosystem, growing at 45%? 20% is nothing. 20% gets swallowed up in no time. These are all factors that come into play where what is the HIVE economy doing? And if you have Venezuela, just using that as an example, that all of a sudden they require, Venezuela probably, if they got enough shops, they're going to require millions of HBD in their local economy on their phones going back and forth. That's 20% easily of the whole float of HBD right now.
Sweet. Let's hit these questions. We got a bunch piling up. First question, and I'm going to step back a little bit from HBD just to give everyone a little bit of a breather. Since we've been talking about HBD for the past 30, 40 minutes specifically. So to take a step back, how much of your private portfolio is made up of stable coins? Anyone can jump in and take this, but I think a more interesting question related to this is it kind of is a lens into how we feel about stablecoins. What use case we believe in them. Obviously, this is more of a portfolio question. But if you were to put like a percentage on, if you have stablecoins in your portfolio, what percentage of your portfolio is stablecoins? Eric, you want to start? Eric might be having trouble. Edicted, you want to answer that one?
I'm distracted. Can you summarize that again?
Yeah, no, you're good. What percentage of your portfolio is stablecoins?
Oh, like none. I'm hopeless.
Yeah,
Absolutely
so
hopeless.
why would you say that it's none? Are you looking for, mostly exposure to the crypto upside, or,
Well,
what is
if you
another
want to
reason
know
for that?
about my portfolio, it's basically like at this point, it's like all volatility trading. I really like Bitcoin. I really like HIVE because they're not like Bitcoin has decoupled from the legacy economy and HIVE is decoupled from Bitcoin. And now with Rune, with the whole loan system, Rune is gonna be like decoupled from the bear market, like the next bear market. Say it comes in 2026. So I like to have all these tokens that aren't connected to each other, and then when one's doing good, I sell it out into the ones that aren't doing so good. And obviously HBD is amazing, and I feel really foolish for not stacking more during the good times, especially when it's been 20% this whole time. Like it's ridiculous how much money I could have easily gotten 60K into HBD, and then I'd just be making passive $1,000 a month, which is like crazy to think about, like after going through a terrible bear market or whatever. But yeah, I mean, I'm just like hyper perma bullish on crypto, so I usually try to stay away from stable coins because I'd rather just hold hold all the time and then take the big hits during the bear market and just not worry about it.
Yeah, absolutely get that. Eric, you got your hand up?
Yeah, so to answer that question and echo what Edicted said, the thing is, if you want to go into stablecoins, you have to know the markets, or you at least have to know the cycles and know how cryptocurrency and how the financial system in general works. Otherwise, you are not going to leverage HBD or any stablecoin the right way. What I mean by this is, if you are in the accumulation zone, you don't want to be holding stable coins as a long-term holding. You want to have stable coins so you have powder to keep buying into whatever you feel or you think is going to perform well. If you already made a lot of profits because the cycle or the markets are performing well or are at peak or are at all-time highs, then you need to go into stable coins because you need a cool head. You need to assess where you are. It's better to take it easy. If you are right after the bull market peak happened and then everything's going to crap, then you need to know how to go into stable coins and how hard and to know if maybe you're gonna go into stable coins and then the market's gonna go up again and then you're gonna follow through and then but try to buy again, etc., etc. So the question of how much of your portfolio is in stable coins, it depends a lot on what part of the cycle we are.
Yeah, I definitely think, and that's why I thought it was an interesting question. Asking any person who's got a crypto portfolio what percentage they're into stablecoins is kind of a lens into how they feel about the overall market. So that's why I thought that was an interesting question. So back to HBD, cool guy 222 asked, is it important to get HBD listed on more centralized exchange platforms? What do you guys think? Dan, you want to take this one?
No, not really. I think that people can just convert to Hive, and I think having a Hive to Bitcoin decentralized DEX, well, decentralized DEX, a DEX, no KYC. I think that's most important. Merchant adoption in general of HBD should be the overall goal. We are not a risk off asset in terms of you're going to be flipping it back and forth. You're not competing with Tether. Like, let's be real. But we can do things Tether can't, and the rest of those centralized stablecoins can't. So I always say focus on your strengths, double down there. You're gonna have weaknesses. F them. Focus on your strengths.
Yeah, I am definitely I definitely agree with you that I think decentralized exchanges should take a little more importance over, trying to get listed on centralized exchanges. We kind of talked earlier about the issues that Hive has in terms of, getting both Hive and HBD listed on centralized exchanges. And it's not anything to do with Hive, on its own. It's the problem is actually just the industry and the way that centralized exchanges operate, which is ironically that they don't want cryptos that are fully decentralized. They want to have a key leader or a central team that they can kind of pick on in order to run the business for them.
Okay.
When a node goes down or something else. Tass, you want to chime in?
Yeah, I just want to add something to this. I don't think it's even going to be a question for the exchanges. HBD is not going to be allowed on centralized exchanges in the United States. HBD is not going to be allowed on centralized exchanges probably in Europe at some point because it's an algo stablecoin. Those are going to be regulated out. Centralized exchanges, which are going to come under regulation, will have no choice but to bypass them because the regulation is going to say you have to have asset-backed coins, you have to custodian with these type of institutions that we approve, which is the banks themselves. And that's how they're going to push it in those areas. So I think what Dan was saying is not even a choice, not even we should focus here. It's going to be the only path because these decentralized exchanges, even if they are these centralized exchanges, even if they want to add us, it's going to be regulated out, which probably means also they're not going to be able to touch Hive in the future or be unwilling to touch Hive. So, we have to go through the DEXs. We have to look at our own liquidity pools and building them up and creating our own avenues to get to something. I mean, you can go on any of these EVMs and set up a pool tied to USDC or Tether, and that's what you can use as your on-ramp, off-ramp into the centralized exchanges if you have to go in and out of fiat. Or like Dan said, you can use Bitcoin. You can set up these different pools, but I don't think we're going to have a choice.
Yeah, I think as a decentralized stablecoin, I think it's important to kind of stay on that decentralized layer. Not only important, but pretty much forced and necessary. And I don't think that that's a bad thing. And like Dan said, focus on your strengths. And the strength of HBD is the fact that it's decentralized. And moving it into centralized exchanges is just adding a kind of a risk point. You're only as weak as your weakest link. So I do think it's important to kind of stick to the decentralized exchange models. Next question is, do you think the social aspect of Hive will ever become less relevant as other types of products are built on it? Or is it always going to be the core of the blockchain? And obviously we can kind of tie this into the stablecoin conversation, since we're kind of talking about HBD and the adoption of it. Does that kind of take away from the social aspect of Hive? I think is a pretty big question that circulates around the blockchain. So this one's from Tokenized Society. Do any of you guys want to tackle that?
So we're talking about like blogging. Is that what we're saying?
Yeah, I mean, the social aspect of Hive can mean different things. I mean, obviously, you've got blogging and then you've got threading. So, do you think that, by talking about HBD, by talking about other types of products, like time vaults or, HBD bonds, are we taking attention, awareness, and basically effectiveness away from the social layer of Hive?
I think people all around the world, they really just want to work. They want to work and they want to be paid for their work. So if we come up with some kind of front end that's like better than what we have, like obviously that's going to take over, like if you can pay people in Nigeria like $10 an hour, that's incredible. Like everyone's going to jump on that, every single person. You know what I mean? So that would be the goal, but it's really hard to create that kind of infrastructure. And like I've always seen comments on Hive as not really a social thing, but more of like when you look at it on the blockchain, a comment is like a declaration that you've done work, and it's like proof of work. It's like I did this work. Will the community reward the work that I've done. And it doesn't have to be anything social. There's a specific place in the comment for code for JavaScript. So like it it could be anything in there. It could be an off-chain thing that's just like, hey, I did this thing. Do you want to reward it? Yeah, I think that blogging and the social media aspect is very niche in a lot of respects, especially long form. Obviously, we've talked about this before. Long form blogging is very, very niche, and people are more attracted to, the Twitter of it all, the short form content, the cat videos, stuff like that. So I think we have a long way to go. And my focus has always been on gaming. I'm trying to find like, a game that I could get behind, but I haven't seen it yet.
Absolutely. Yeah. I mean, my personal opinion is that, having one doesn't really take away from the other. I think if HBD were to get widely adopted, um, that would just lead to more people looking at Hive and potentially becoming a Hive monthly active user, which obviously is a big focus of mine, which is that, the user base is the layer zero. It's, the base layer of value to the whole blockchain ecosystem. Eric, you got your hand up. What's up?
Yeah, so to answer the question of if the social side of Hive or the social media side of Hive will ever become irrelevant or will be rendered useless, I don't think it will, and I think that if we allow that to happen, we do not deserve Hive as a database. Why do I say this? Because social media is growing exponentially. People from 17 years and younger, they are no longer Googling news. They are no longer browsing the internet, finding information, etc. They just go to TikTok or they just go to Instagram. They get all their information from social media websites or social media platforms, and people who before were not realizing that social media in its current iteration is completely decentralized and the agenda enforcement is too strong and there's a narrative everywhere. People are starting to realize that. A lot of people who before were not even aware of a system that wants us poor and wants us ignorant exists. They are now jumping into all of these. They are still Web 2, but they are labeled by themselves as censorship proof, like Parler, like this one, the one that Trump got a partnership with. Can't remember, but
Truth Social.
Yeah, Truth. So the social media aspect is going to become more relevant, and at one point it will render useless all of these news TV shows and radio and whatever seems like it's from the dinosaur era. It will be rendered useless, and social media will be the only place where people will have a marketplace, will interact with other people, meet people to get married, blah blah blah. We are already seeing the first iterations where only the first world countries and the people who are tech savvy in the third world countries get involved with. For example, in Mexico, we still have a big chunk of the population who do not deal with social media, who do not deal with tech as a day-to-day tool. But in 20 years, anyone who doesn't, it's going to be easier for them, for anyone to have a social media account a la WeChat kind of thing, where the government controls everything and they keep track of everything, and then we will have the Web3 alternative, and that's why we need to keep making Hive robust, both in the tech as well as in the economic aspect, but also in the social media one, because that's where we're gonna get our users. We're not gonna get them through, hey, come for feeless transactions. No, we're gonna tell them, hey, come for cat pictures, and oh, by the way, the government is watching you, everything you do in your WeChat alternative in your country. Why don't you start using Hive as an ecosystem, not as a blogging site, not as a liquidity pool kind of thing, not as a financial tool, as a WeChat kind of thing, where people can do whatever they want without being surveilled by the government or by the system that be.
Yeah, final two questions here before we jump off. We're at a little over the half-hour mark. Taskmaster asks, what stablecoin does McDonald's pay Cal to wear the logoed hat? They don't pay me. I wear it because that's where I work. Thorkel NFT asks, have you thought about bringing another stablecoin like USDT to Hive as a synthetic token? Do you think this would help the ecosystem in some way? My personal opinion is I think we should look to pair HBD, not only to other stablecoins, but just to other, cryptocurrencies that have deep levels of liquidity on various chains. So, obviously, I think Bitcoin is one, Ethereum, and then, also stablecoins like USDT. I think it's important to do the pairs because, those are the rails that you can get liquidity in and out. And I believe that that's kind of like a key issue facing both HBD and Hive. I think it's important to build up that liquidity on DEXs, kind of like what we've been talking about. But in terms of bringing like a synthetic, like a Hive dash USDT on chain, I would take it back to a fundamental level of what kind of value does that actually bring to Hive? And there's different ways that could be formatted. Does Hive charge some sort of fee for that? Is there like a wrap fee, unwrap fee type of thing? And then does it, like buy and burn Hive or something along those lines? Everything has to be kind of at a value level. What real world value is it bringing? Eric, you got something you want to add to that? Maybe not. I just saw you unmute. All right. I think we're good unless anyone wants to tackle that question of bringing synthetic versions of stablecoins onto Hive. So let's move into some closing thoughts. We'll start with, I think Eric may have fallen out. Let's start with Dan. Do you got any closing thoughts about stablecoins in general or HBD, and how you perceive everything we've talked about? Just kind of wrap it up.
I think creating a deep liquidity pool from HBD to Bitcoin is very paramount. Utilizing those fees into a DAO to pay out various, just as incentives is very important. So you have your HBD to Bitcoin. Bitcoin is your Trojan horse because it's everywhere. You can get any kind of fiat with it. So, once you have Bitcoin, you're good. Focusing on the Lightning Network, that's going to be pretty much where Bitcoin's heading as a payment layer. So we should be focusing our HBD to Lightning Network Bitcoin and Bitcoin in general, and trying to get as much Bitcoin onto the Lightning Network as possible before the fees skyrocket. In theory, the fees got to go high. So that's my thought on HBD. And saying Hive and HBD, they're one and the same. The whole idea of circular economies. What is a circular economy? It is basically a tokenized community. That's what this is all about. Giving people a value for value method to create a community, to create a token, i.e. incentive mechanism, where people focus inward their energy instead of working for someone else. They work for a community. Everyone brings value, and now you can create your own economy, your own community. And the great thing about this is it's a part of a branch that's on a tree that no one can cut down. So all that work you build, it stays with you. So it's important to not take the easy way out and say, well, it's easier now to use XY Tron bullshit, whatever. Excuse me. It's better to say, look, this is the way to do it. And if you're going to do it right. So create your circular economy today. It's going to get easier and easier to do. Look at in Leo, they're pretty much pioneers at this stuff. They did it before the technology was even a thing. They kind of just brute forced it in reality. But anything is possible when you get a group of people who have a like-minded goal, and you can incentivize those individuals and reward them with social status within the community. Anything is possible. So
Anything is possible. Love it. Thanks, Dan. Task, you got any closing thoughts?
Yeah. Circle brings out USDC. They need others to adopt it. They need others to build around it. They need others to incorporate it. Same with Tether. The advantage that we have is, and it's not going to happen any other way. The path forward is we are going to have to build it. But there's incredible power in that because we are not dependent upon outsiders, other people building the use cases, adopting this, giving us utility. We do it ourselves. And with HBD being a base layer coin, I think every application, every game, every project, everything that anybody's doing in terms of building on Hive, if you need a medium of exchange, you have to look at HBD and incorporating that because that helps not only your project, it helps the entire ecosystem.
Absolutely. Edicted, closing thoughts?
Yeah. So I don't see any reason, like I don't trust USD. Obviously, none of us trust like the dollar or the banking system or anything like that, which is why we're here. But like, I don't see any reason why one day a crypto asset isn't going to come up and just become its own stable coin with its own like rules for keeping it stable with elasticity and stuff. Like, I really don't have a lot of faith in um, the USD like going forward. I think like all the research that I've done shows that people are really worried about CBDCs and everything, but I'm looking at the ecosystem like CBDCs can't happen unless USD collapses. It can't really gain a foothold unless the entire retail banking sector goes down and it needs to be fully centralized to the central banks. But in terms of HBD, I really think that like we need to figure out a way to keep HBD within the system when the bear market comes. Like because um, it's weird because when a bear market comes, most people would assume, oh, people are dumping their crypto into stable coins, but we can see on the charts that that's not what happens. Like during a bear market, the market caps of stable coins and crypto goes up at the same exact time. So with Hive, that makes us a lot more volatile because during a bear market or during a bull market, Hive is going to go up and then HBD is going to go up at the same time. It's going to gain demand. The extra demand in HBD pumps Hive even more. And then during a bear market, it's the opposite. It's like Hive goes down, the demand for HBD goes down, even though you'd expect it to go up. It doesn't. All the money is exiting. So I think we really need to think about like how are we going to kind of limit the demand for HBD during bull markets and increase it during bear markets. And I've said like we should increase the interest rates during bear markets and we should decrease the interest rates during bull markets. And nobody really agrees that that's the way to go. I kind of like want to make my own token just to see if it works. And I think that's one of the great things about Hive is that we can prototype stuff on like Hive Engine, see if it works first, and then incorporate it into the main thing. We've done that. We've done that for a couple things. Yeah, that's pretty much it.
Sweet. Yeah. Thanks for jumping on. Everybody who joined. Eric fell out of the spaces, and for some reason, he's not able to get back in. So I will wrap this by saying that, I believe very firmly in stablecoins in general and their ability to grow the crypto space for the better. I think that there's going to be, pitfalls along the way. We saw what happened with UST, but and obviously USDC has been losing market share, like I was talking about earlier. I don't see a blow up event for USDC, but I do see them kind of declining from the 19% market share that they're at today. I don't think that decline is going to stop anytime soon. And my ultimate hope and ambition is that decentralized stablecoins, like HBD, start to take more of that market share away from USDT, USDC, and some of these other big stablecoins. I think there's a huge place in the marketplace for them. And Leo Premium launched 2 weeks ago, and the only way to pay for it is in HBD. So it costs 10 HBD a month, and we built an entire backend, an entire payment rail to handle HBD payments and HBD subscriptions, and then we're launching more features that are paid for in HBD. So I'm very intently focused on getting more HBD adoption, making it more of a medium of exchange, like we've talked about during the show, and I do really think that HBD can gain mass adoption. At scale when it's built the right way and it gets payment rails set up, and we see liquidity on decentralized exchanges start to get built. So yeah, we had a good discussion today, just talking about stablecoins in general, and obviously we focused a lot on HBD. I think all of us have kind of a vested interest in seeing HBD succeed, and I think most of us believe that there's a lot of potential there. So thanks to everyone on the speaker panel, Dan, Eric, Taskmaster, Edicted, Edwin jumped in as well. So thank you all for coming. Thanks for everyone in the Threadcast. I'm going to be picking one of you for the free month of Leo Premium after we jump off the live. But that's all I got. I will see you guys next week on Wednesday for Chain Chatter number 3. Thanks. See ya.
This space was downloaded via spacesdown.com. Visit to download your spaces today.